It's time for your call sheet, where we look at the topics driving the trading day ahead. Crew members today: Ryan Dietrich of Carson Group, also a CNBC contributor; Chris Veronne of Strategas; and Doug Boneparth of Bonafide Wealth, also a CNBC Financial Advisor Council member. Great to have you all here. Welcome, welcome. We got a bunch to get through. We can do it. I know we can. Doug, I'm going to start with you. I'm going to pick up the conversation we were just having before the break with our guest from Kraken. And that is the fact that we've seen this downdraft in Bitcoin. And he argues that actually one of the biggest things driving it right now is the SpaceX IPO. The fact that people are taking profits or just moving money around amid this capital raise. So just want to get your thoughts on that and how much of a big event this could be more broadly for the markets.
Sure. I mean, that makes sense. People are taking their speculative, risky assets, and saying, all right, I want this other maybe speculative, more risky asset here, right? But you're comparing Bitcoin to SpaceX, and these are two very different things. But yeah, where are you getting the capital? But with Bitcoin specifically, 50% drawdown from all-time highs. I mean, I've been a holder since 2013. This is what, 5th, 6th, 8th, 100th, 50% drawdown or more. You're obviously participating in a volatile asset. You should expect this.
Really? You're hardcore Bitcoin guy. That's like breaking news to me right now.
Early miner. There's a story there.
Okay, we'll get into that. Chris, want to get your thoughts on this in general, because we also got the OpenAI filing, Anthropic's in the pipeline here. You had the Google capital raise last week. Reports that you could get others piling in too. Just how does it speak to the market environment?
Well, I still think there's certainly appetite for this, and if you put this in context of what we've seen historically, I still think we're a far cry away from the really euphoria that accompanied these IPOs in '99. And I know there's so much talk of how narrow this market is, but let's put it in context. You still have 60% of the S&P above the 200-day right here. That was like 30% at the March 2000 top. So yes, it's not the broadest market we've ever seen, but it's a far cry from that 1999 comp.
All right, Ryan, your thoughts on all of this?
No, great stuff. Thanks for having me back. Building on what Chris just said there, you think about Friday, right? Friday, I know the S&P was down a lot, worst day of the year, but 240 stocks in the S&P 500 were higher. And one other thing about sentiment, we saw near record put volume on the QQQ and the SPY on Friday. So we saw something like that on a 2% pullback back in May. If you might remember, we had actually a few down days in May. Everybody freaked out in a couple days. And I'm not saying after a 19.5% rally in 2 months, we can't have a little more consolidation, maybe even a little more weakness. But Morgan, that panic that comes in on just any bad news or any weakness, that's probably a net bullish thing overall. Yeah,
I am going to go back to this idea of raising capital right now in this market. Where is it all going to come from? Is there enough liquidity, Ryan? And, do we see some disturbances, if you will, across asset classes?
Well, I think there's plenty of liquidity. I mean, you just look at the economy. I mean, just last week, we saw better ISM data on services. We saw manufacturing. I mean, I get it after this rally. But you look at it like healthcare took the baton last week. We've seen industrials, financials. I mean, Chris could talk about financials. I know he has been looking at them. I mean, a lot of financials look good. Regional banks are hitting like the highest level they've been at in a long time. I mean, I think just that baton getting passed around. I know we all talk about the IPOs and tech, and I get it because they've been the hottest area for sure. But let's just remember, keep a diversified portfolio. Stay overweight equities in an inflationary growth environment. That's how you're going to benefit, and that's what we've been saying all year.
All right, Chris, what do you want to say about financials?
I think this is what was so remarkable, frankly, about Friday. The Q's down nearly 5%. Breadth on the Russell 3000 was about even 1-to-1. Where does money go when they start to sell tech? I think healthcare is emerging here. I think regional banks, as Ryan notes, certainly look fantastic here, and they've navigated the flattening curve at a midterm year, frankly, quite well. I think regionals are about to break out. And then even there's a little hint of life from discretionary here. Remember, I think Ryan makes a good point about the PMI. PMI is 54 right now. You typically don't begin Fed tightening cycles with a PMI still that low. I think you have to be talking about 57, 58, 59 before you reintroduce the risk of worse raising rates.
Interesting. Well, you're saying that, and Doug, I mean, we have a market that is starting to price in the possibility of rate hikes. How much of this now is going to hinge on some of these inflation reports?
I think a lot of it is. I think most retail investors, however, need to understand, if you go back just a little more than a year, we're talking April of 2025, right? We had a 20% drawdown only to absolutely rip it through to the end of the year. Most retail investors can listen to this and pay attention to this, and they should. But they should also be prepared for the fact that things can get volatile very quickly, and that's really where they're going to be tested. Ryan said it best: be diversified, but also be ready to take advantage of opportunities. That's checking your liquidity levels and just checking overall where your positions are at.
All right. Ryan, in light of that, I know we've talked about it before. We're gonna revisit here because we do have CPI tomorrow. We have PPI on Thursday. I mean, we're seeing it's not just sticky inflation; it's a reacceleration here, particularly on the top line. Can stocks withstand that, especially if the Fed starts to hike again potentially here, or at least a bond market and a dollar that are moving towards a tightening cycle anyway?
Now, Morgan, we think stocks can hang in there, even with inflation accelerating a little bit, right? We've said all year, inflationary growth environment. I think the big question, though, is will the Fed hike, like you just said? I mean, we've been seeing inflation broaden out, right? It's not just about services or goods. Inflation has been broadening out even before the war started. We don't think the Fed's going to do anything. We think the Fed is on hold. That potentially is even a little more dovish what the market expects, and that's probably still going to be net positive for stocks. Maybe not for bonds, but that's why we're underweight bonds here still.
All right. Chris, your thoughts?
Listen, I think when you look at rates in particular, Morgan, this is not just about inflation. Economic surprises have confirmed here. The move in yields from, call it 4 to 450, 460 here has been just as much about growth as it is about the other side here. 5-year break-even inflation rates are actually back to where they were before the war even started. So I think there's much more of a growth side to this. And you see it with real rates breaking out. You see it with industrials. I mean, look at stocks like United Rentals or Grainger or Fastenal, the rails and the trucks. These are pro-growth stories. I don't think it's as much about inflation as many think.